The Alligator indicator is a technical analysis tool. Traders use it to identify trends and potential reversals in asset prices. It's based on the idea that financial markets, like alligators, spend most of their time resting or ranging. Then they wake up to hunt for food or trending. The indicator helps traders visualize these periods of rest and activity. This allows for better timing of entries and exits in the market. Essentially, it simplifies market behavior into a digestible format. This makes it suitable for both novice and experienced traders alike. The Alligator indicator is composed of 3 smoothed moving averages, or SMAs. These moving averages help traders identify trends and potential market reversals by smoothing out price data over specific periods. These SMAs are color-coded for easy identification on a price chart. The colors make it simple to distinguish between the different lines and understand their significance at a glance. The blue line represents the alligator's jaw, the slowest moving average, which is the 13-period SMA. This line helps to identify the longer-term trend in the market. The red line is the teeth, a slightly faster SMA, which is an 8-period. It provides a medium-term perspective, bridging the gap between the long-term and short-term trends. The green line represents the lips, the fastest SMA, which is a 5-period. This line is crucial for identifying short-term market movements and potential entry or exit points. Each moving average is shifted forward in time. This shift helps traders anticipate future price movements and make more informed trading decisions. The jaw is shifted forward by 8 bars, the teeth by 5 bars, and the lips by 3 bars. This staggered shift allows for a clearer visualization of the market dynamics. This forward shift is crucial for understanding how the lines interact. By observing these interactions, traders can better predict market behavior and adjust their strategies accordingly. When the 3 lines of the alligator indicator are intertwined, it suggests a sleeping alligator. This state indicates that the market is in a period of consolidation with no clear direction. Traders often refer to this as a ranging market, where prices move sideways without any significant upward or downward movement. This signifies a ranging market with no clear trend. During this phase, traders might avoid taking new positions, waiting for a clearer signal of market direction. As price action gains momentum, the alligator awakens. This awakening is characterized by the lines of the indicator starting to separate and move in a particular direction, signaling the beginning of a new trend. The lips or green line will be the first to respond, followed by the teeth and then the jaw. This sequence helps traders identify the strength and direction of the emerging trend. When all 3 lines are moving upward and spread out, it indicates a strong uptrend. This is a signal for traders to consider entering long positions, as the market is likely to continue rising. Conversely, a downtrend is confirmed when the lines move down, with the jaw leading the way. Traders might look to enter short positions during this phase, anticipating further declines in price. Traders look for crossovers of the lines as potential entry and exit points. These crossovers can provide valuable signals for making trading decisions, helping to maximize profits and minimize losses. For instance, a buy signal is generated when the lips cross above the teeth and jaw. This indicates that the market is gaining bullish momentum, and traders might consider buying to capitalize on the upward movement. While the alligator indicator can be a valuable tool, it's not without limitations. Traders should be mindful of its constraints to avoid potential pitfalls. Like all technical indicators, it's best used in conjunction with other forms of analysis. Relying solely on the alligator can lead to misinterpretations and missed opportunities. One limitation is its tendency to provide false signals in sideways markets. These false signals can mislead traders into making poor decisions. During these periods, the lines may intertwine and generate misleading crossovers. This can create confusion and uncertainty, making it difficult to determine the right course of action. Furthermore, the indicator may lag in highly volatile markets. In such environments, the alligator might not provide timely signals, causing traders to react too late. This means that it might not react quickly enough to sudden price swings. Rapid market movements can outpace the indicator, leading to delayed responses. Traders should be aware of these limitations and exercise caution when using the alligator. Understanding its weaknesses is crucial for effective trading. Always combine it with other indicators and confirm signals before making trading decisions. This approach helps to mitigate risks and improve the accuracy of your trades.